So as we anticipate the continued rebound of gold off of its support level, we continue to see the soaring of silver prices, copper prices, and pretty much every other commodity underneath the sun. Bipartisanship ends this week with stimulus vote, and that is according to Yahoo News. Now, with the $1.9 trillion stimulus plan being voted by the end of this week, we should start seeing gold prices and other monetary metals and base metals react to the upside, which will be fantastic to see once again. And once it really starts getting into the system and checks really start getting out there, $1,400 checks, we should really start to see some momentum building. But it's not just gold and silver who will be the ones, dancing along within this party. This is something that the financial markets within the United States in general needs as far as, their continued success upward. Now, why is that? Well, if you haven't been noticing it, recently, the markets have been a little bit, as you could say, a little bit kind of lagging them, within the recent weeks. And the Big Short trader, Michael Burry, you might remember him from the movie The Big Short. And well, he's a real life guy. The movie The Big Short was made after him and his quote unquote greatest trade in history from the financial crisis back in the late 2000s. But he's a pretty popular guy, especially when you kind of consider financial news that comes from the quote unquote fringe. But he's a really great guy who tweets some really interesting things. And take a look here. He tweeted the following: speculative stock bubbles ultimately see the gamblers take on too much debt. Margin debt popularity accelerates at peaks. At this point, the market is dancing on a knife's edge. Passive investing's IQ drain and stonks go up hype add to the danger. Now, as you see from this graph here, let's see if I can make this bigger for you guys. There we go. Let me just move this down a bit. All right. So the red line is inverted and it's in billions. The red line represents margin debt. And as you can see here, it's just been trending from 1997. Actually, let me move it up so you can see that year. 1997 is the start of this graph and it goes to 2021. Now, let me bring it back down. So from 1997 on the left side of this graph going all the way to 2021, margin debt has just been on the rise. Remember, this graph is inverted. The red is inverted. But take a look here. Right before recessions, the margin debt actually hits a peak. So does the S&P 500, which is the blue line. And then obviously the S&P 500 comes down during a recession and the margin debt and goes down because of it or during that time. But then after recovery, margin debt continues to go up. So does the S&P 500. They meet again and then they crash again. And what's particularly interesting to see here, and you may not be able to see this unless I move it, but after 2009, particularly, the S&P 500 just continued to shoot up. Margin debt continued to shoot up. And you might remember during 2018, there was, some worry that we're going to have a recession during that time, but, things changed. But here's the interesting thing. As we didn't see a correction here during that 2013, 2014 period, and things just continued humming along, when the Rona hit, instead of the S&P 500 coming down, it actually shot up during this recession that we are currently in. And also margin debt during the recession continued to shoot up. So what does that mean as far as this pattern is concerned? Well, it means the cyclical pattern is a little bit out of whack here. And what a lot of people are worried about, including Michael Burry here, is that at any time, because we don't really have the past to help guide us here, we could see the S&P 500 come down along with margin debt. And the interesting thing about margin debt, and for those of you who don't know what margin is, it's essentially the loan that you can get from your brokerage account so that you can buy more stocks than you could have otherwise with your own cash that you deposited within your brokerage account. Now, as we know, the popularity of Robinhood has been shooting through the moon. Robinhood actually has democratized margin debt. So just like with any other debt, you have to pay interest on it. If you actually watched the hearing or the testimony with Robinhood and Citadel and others last Friday or last week, the CEO of Robinhood actually mentioned that unlike other brokerage firms, they actually pride themselves on democratizing margin debt. So those who have, let's say, $1,000, $5,000, $10,000 in their Robinhood account, they would be able to access margin at low rates, similar to somebody who, let's say, for example, deposits $100,000 or maybe $1 million. That's not necessarily true for other brokerage accounts who they tier their interest rates depending on how much you put into your brokerage account. So with other ones, if you put in $1 million, you're going to likely get the lowest rate for interest you have to pay. If you don't put that much in, you're going to have to pay a higher interest rate. But again, with Robinhood, they have reduced it for everybody. And as we know, Robinhood, there's been a lot of trading that's been going on within that brokerage account. So I'm not surprised to see this graph go so high during 2020 and currently right now in 2021, given the fact that Robinhood trading has increased so much, and so has margin debt, as you can see. So if we get more stimulus, I would not be surprised if we continue to see this rising. Now, I would be worried once we, let's say, round the corner a little bit and the market becomes toppy again without that source of liquidity. I'm curious to see how that impacts the markets. Now, obviously, retail investors don't make up the majority of the financial markets, but it would be interesting to see how it does impact the growth of the S&P 500. But let me know what you guys think about the financial markets, margin data, and just generally this stimulus vote that will be coming by the end of this week, and what you think or how you think it will impact gold and silver prices. All right, thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.